The Bank of Canada tried to save Canadian housing. They gave us 10 straight rate cuts, but instead of recovery, the housing market is dead. I'm about to show you one chart that shows how miserable the Bank of Canada is failing right now, and this is a direct policy failure, and that Bank of Canada is entirely to blame. Stay with me to see the moves buyers and sellers must make to survive this housing stalemate. Hi, my name is Zen, and if you enjoy my data-driven and number-crunching real estate updates, be sure to like and subscribe. So this Wednesday will be the Bank of Canada's next announcement on October 30th, and the prediction markets say that we are going to be getting a rate cut. Now, I've been saying for the past little bit, whether we get a rate cut or not, it's not going to move the needle, because since May of 2024, we've had 10 rate cuts. 10 25 basis point rate cuts, bringing us to the current 2.5, where we've actually had 2 jumbo rate cuts slotted in, and nothing has moved for the market. If anything, it's actually gotten worse. You know that saying that says insanity is the definition of trying something over and over again and expecting a different result? So this is the Bank of Canada trying to cut rates over and over again and expecting a different result from the housing perspective. It's just not going to work. And this applies to both sellers and buyers. And you have to understand this idea. Because in the last decade, we have had this assumption where, and it's very simplified and it has worked, but the environment is different now. And the assumption is that when rates come down, prices go up and sales would go up. And that's historically what has happened. So it is correct, but it's not correct right now because we are going into a potential recession where the economy is not looking great. So this chart I have in front of you right now is me mapping out the total number of sales in the Toronto area, which includes everything in the GTA. And it also maps Bank of Canada's interest rate. So how you read this chart is on the y-axis on the left side here is your number of home sales for the year, which basically matches these blue lines I put over here, respective to the years down here, going all the way back to 2017. Now, on the right y-axis, you have the Bank of Canada's overnight rate, and generally your mortgage rates would be plus 1% from this red line, give or take. So you can see over here, let's call 2018, 2019 neutral, the normal, as I've been saying for a little bit of time. When we had the Bank of Canada's overnight rate sub 2%, sales were kind of what I would say in the normal range of like 80, 90,000. And then when we had the rates come down because of the pandemic, you can see the sales ballooned all the way up to 120,000, which is the historic most that we've ever seen. And then as rates kind of climbed up, you can see over here, this is that big spike up in 2022. Sales kind of dropped down here and they've been dropping down here. With the way 2025 has been rolling out, I basically projected what the total number of sales we would get based on our current pace for 2025. And we're going to be seeing less than what we saw in 2024. We're going to be getting close to 60,000, which is a number we haven't seen since 2000, before the population almost doubled and before we had all these condos in Toronto. So to get to that number is really, really bad. So that's just to indicate to you how bad the sales are. And sales are important because I've been talking a lot that we have so much inventory right now. Unless sales increase and we absorb some of that inventory, prices are not going to go up. They're going to continue sliding down. So this assumption that rates down, sales up, and prices up is not valid anymore. We've already had the 10 rate cuts, which you kind of mapped over here. And look, sales have been flat. If not, they're getting worse, which means this assumption of rates down, sales up, prices up is not true. And I've been saying it a lot to a lot of people who have been calling me and my clients. It's just not an assumption that we should use anymore because the economy is totally different from what it was in the last decade. Before you even think about selling, don't let another chatbot price your biggest asset. Your property is not just another number. Hit the link in the description below and I'll send you a personalized assessment with real data and expert insights so you can sell with confidence on your terms. And I'm going to give you the mental framework that I can see from talking to buyers and sellers on why we have this housing stalemate. So when I'm talking to sellers, there's this thing I'm going to call the holdout hypothesis. And it's just this notion where they believed in the past assumption of rates down, sales up, prices go up, which is not true. And from a psychological perspective, whenever they hear that, hey, Bank of Canada is going to cut rates, there's always this idea that, hey, if I wait it out a little bit, I may have that bull run or sales may increase or things may have bottomed already and that I should hold out and get the price. But if you look at your Toronto area average price since the peak, which is over here, which was like 1.33 mil, you can see we've zigzagged up and down, and this has to do with more so seasonality than anything. But you see this red trend line over here that I'm going to highlight again. prices are on a downward trajectory. They are just going down right now, and they're not going to go up. Yes, you may get a little bump up seasonality from spring or fall relative to like say winter, Christmas, or like summer. But on the long run, it's just heading down right now. So the idea of waiting in hopes that an interest rate cut is going to move the needle for you isn't true. And I've talked about this before in the past as well, where we really have to look at inventory to see where things are going to go as opposed to interest rates, because inventory is the bigger indicator of where prices are going to go in the next 30 to 60 days when a seller has their property listed. And from the psychological perspective, when talking to a lot of sellers, it's perfectly normal that sellers want to try and test a price so they don't leave money on the table, which is fine. But you have to adjust accordingly. And right now, where we are in the fall market, where we're about 45 to 50 days out, we can see there's a lot of sellers adjusting their prices. So I would not be surprised if I continue seeing this trend line going downwards for average prices, which means that spring market isn't going to get any better for anyone who's thinking, hey, I'll just hold out until spring. It's not. And the reason for this is that the buyers right now are incentivized to wait. There is no reason for them to absolutely jump in right now unless two things. They get an absolute steal or they fall in love with the home. And yes, a lot of people who are watching this may be very analytical, but you also have to understand home buying is a very emotional decision. So there are a lot of personal reasons people have to buy a home. And that's where we're seeing a lot of these like 10 out of 10s do get multiple offers on offer night when they're positioning it that way, because those are the homes people want to create memories in. But when we look at the big picture and why the general sentiment on buyers is to wait is that right now I've been talking about how we have months of inventory over 5 and it's not going down anytime soon. And when you are basically within this red box over here, which is over 4 months of inventory, prices are trending down. And this is exactly why when you look over here, prices are trending down. From a buyer's psychology perspective, unless it's a home that is a 10 out of 10 where members are being created or they're getting absolute steal of a deal, they're not really pulling the trigger. And this is what I've been saying. The buyers have a mindset of what they're willing to pay for something right now, and the sellers are over here. And the only time where you have an overlapping of minds is where basically you have the sellers adjusting their price because there's a reason for them to sell, whether it be financial stress or a tenant has moved out and now the property is vacant. That's where you're actually getting these properties sold. But there's a lot of garbage properties and listings that's just like sitting on the market at a very high price point, like say 2022 peak pricing. And those type of properties are not getting eyeballs and the days on market is just increasing. So you can see why there's a housing stalemate, because the buyers don't want to pay a certain price and the sellers aren't moving unless they absolutely have to sell. And that's why sales are so low right now. And this is why I was saying, despite Bank of Canada's best effort in trying to save the housing market and bail out the housing market, all of these rate cuts over here haven't moved the needle for sales. And that's because sellers are stubborn and prices are sticky on the way down. It takes one seller to fire sell a property to change the expectation and the comparables before the next one goes down. It's not instant like what we saw in 2022, because most of those people who had to sell right away in 2022 were caught between two transactions. Which leads me to the structural choke point that Bank of Canada is trying to fix with a lot of rate cuts. But if anything, they're probably too slow on the rate cuts and they should have done more earlier. So this chart over here is talking about the Ontario unemployment rate. And you can see over here, this blue line that has gone all the way back to 1985 zigs up and down. And the yellow boxes I've highlighted were times where we had a recession. So this would have been a 90s recession. And you can see unemployment rate in Ontario went up to as high as 11%. Then you have the 2008 one, which a lot of people remember for the great financial crisis, which affected the US more, but you can see unemployment rate in Ontario got over 9. Then you had the most recent one, which was very short-lived because the government just basically turned on the money printer, but unemployment rate got almost as high as 10%. And now you can see Ontario unemployment rate right now is hovering around 8 over here, where the Toronto unemployment rate is right here, this red line. So I will highlight this for you again so you understand the gravity of where we are. Toronto is basically almost at recessionary levels of unemployment. So where do you think we're going to go in the next little bit? And when I talk about this with a lot of people, do you think in an environment where there's economic uncertainty, whether as a business owner, you're not sure where revenue is coming from, as an employee, you're not sure if you still have your job, are you still going to be making one of the largest purchases in your life? No. And this is where I keep saying, interest rate cuts are not going to move the needle for this unemployment. If we get completely smacked upside down on a recession talk because of trade wars, we are screwed. So this is what I've been saying in the past little bit. When we see a lot of rate cuts coming, it's not that it's going to be stimulative for the housing market. It's that our economy is going to the pooper. So the people who are really transacting right now, like I was saying, because of that housing stalemate, are those who absolutely need to move for personal reasons, and they have the capital to actually make that movement, meaning that their jobs are safe or their business is safe or they have a lot of liquidity or like cash on the reserve right now where they can take advantage of this current market. Quick sidebar, if you're buying but not sure where to start or what's even a good deal, just hit the link in the description below, tell me what you're looking at, and I'll break it all down for you. No fluff, no BS, just real talk from a human and not just another chatbot. So whether we get a rate hold or rate cut tomorrow, it's irrelevant to the housing market. The sentiment is so far past the assumption of rates down, sales up, and prices up that this is not signal. This is just noise. It doesn't mean anything. The signal we should really be watching for is the recession that potentially could be coming and just how severe it is right now. And if you want to see how bad we are doing right now relative to 2008 Great Financial Crisis, make sure you click on the video that's on the screen. I'll see you in the next video. Until next time, your move, your future. See ya. Go Jays!